Most people think Visa and Mastercard are just two logos on a plastic card. You swipe it, tap it, pay, and move on. But behind that tiny piece of plastic sits one of the most profitable, aggressive, and quiet battles in business history. A battle that moves trillions of dollars a year without most people even realizing it. Because Visa and Mastercard aren't really credit card companies. They aren't banks. They don't lend money. They don't send you payments, and they certainly don't chase you for payments. What they actually run are two of the most powerful financial networks on Earth, and the fight to control the network has turned into a hidden war, fought with banks, fees, data, regulations, and strategies the average person never sees. This is the story of how two invincible companies built an empire out of money that isn't theirs, became worth more than almost every bank in the world, and locked themselves into a rivalry with no sign of ending. To understand how this war works, you first need to understand the business model, a model almost nobody understands. Visa and Mastercard don't make money the way people think they do. When you pay $4 for a coffee, Visa doesn't get 4% of that. Mastercard doesn't even get 2% of that. The fee mostly goes to your bank. Visa and Mastercard take a sliver, usually around 0.1%. It's literally pennies. So how do they make billions of dollars? The secret is through volume, enormous, relentless volume. Every time anyone pays for anything, whether it's food, petrol, rent, Amazon orders, or bills, Visa or Mastercard collects a tiny fraction of a penny. One transaction is meaningless. Billions of transactions? That becomes an empire. Visa processes around $14 trillion a year. Mastercard about $9 trillion. When you multiply their tiny fee by trillions, you start to understand why their war matters. Whoever runs the network owns the transaction economy. But here's the part most people never realize. You don't get to choose between Visa or Mastercard. Your bank does. Consumers think they pick between networks, but in reality, banks decide which network sits on your card. Your card might say Chase, Barclays, or even HSBC, but above that sits a network chosen through negotiation. Banks and the other networks constantly fight over fees, incentives, branding rights, marketing budgets, and access to data. Visa might pay a bank millions to switch all of its cards from Mastercard to Visa. Then Mastercard might come back with an even better offer. Most of this happens quietly, behind closed doors, because the real war isn't for consumers. It's for issuing banks. Every bank is a battlefield. This war didn't start recently. Its roots go back decades. Visa began as Bank Americard, literally a product owned by Bank of America. Mastercard started as a coalition of several banks teaming up to stop Bank of America from dominating the credit card industry. So the rivalry began with a structural difference. Visa was one giant system backed by one giant bank, while Mastercard was a defensive alliance formed to fight it. That difference shaped how both companies behaved. Visa used its head start to spread faster, building acceptance in nearly every country on Earth. Mastercard, without a single dominant parent, moved differently, forming partnerships and focusing on innovation. Both strategies worked, but in totally different ways. Visa won the acceptance war early. Their goal was simple: be accepted everywhere. They pushed aggressively into tourism-heavy countries, developing markets, online platforms, and government services. Over time, Visa became the safe default. Merchants trusted it, banks trusted it, even governments used Visa rails to collect taxes, fees, and immigration payments. This gave Visa something incredibly powerful: global scale built into the economy. Mastercard could have tried to copy this, but instead, it leaned into something else: speed. Mastercard constantly pushed new technology first. They were early with contactless payments, early with digital tokenization, and early with fraud scoring algorithms. They experimented with biometric cards, crypto debit integrations, virtual card numbers, and fintech partnerships. This is why so many early challenger banks like Monzo, Revolut, and 26 launched with Mastercard. They weren't choosing a logo, they were choosing flexibility. Visa had the global footprint, and Mastercard had the innovation engine. Then there's cross-border payments, the part of the business that actually prints serious money. When you buy something from another country or travel abroad and tap your card, Visa and Mastercard earn far more than they do from domestic transactions. The fees are higher because of extra fraud risk, currency conversion systems, and settlement complexity. This is one of the most profitable areas of the payments world, and the networks fight aggressively over it. Visa dominates European to US flows, Mastercard dominates emerging markets to Europe flows. Every region, currency, and corridor is a battleground. Things became even more intense when fintech exploded. Companies like Revolut, Chime, Cash App, Monzo, and Klarna processed millions of transactions from young digital native consumers. For Visa and Mastercard, that's the future. Whoever controls fintech controls the next era of payments. Mastercard made the first move, offering easier APIs, developer tooling, and flexibility. Visa retaliated with enormous incentive deals, sometimes paying even hundreds of millions just to win a partner. Many fintechs quietly switched networks mid-growth because one side offered better economics. Consumers never noticed, but behind the scenes, the networks fought tooth and nail for every partnership. And then came the data war. Visa and Mastercard don't know your name or your credit card number, but they know where your transactions happen, how often, what category, what time of day, and whether it's online or in person. This data is anonymized, but it is incredibly valuable. Mastercard sells spending insights to hedge funds, retailer, advertisers, and analysts. Visa does the same. In some quarters, this data business is more profitable than their core payment fees. The networks have quietly built one of the most comprehensive spending databases on Earth. The rivalry hasn't always been clean. For more than a decade, Visa and Mastercard faced accusations that they coordinated too closely with banks on interchange fees. The biggest case resulted in a $5.6 billion settlement, the largest antitrust settlement in US history. Merchants argued that swipe fees were being inflated in ways that reduced competition, and Visa and Mastercard denied wrongdoing, but paid the settlement anyway. The cost barely slowed them down because the networks were too entrenched to be replaced. And then the tech giants arrived. Apple Pay, Google Pay, and Samsung Pay. Many people assumed these companies would threaten Visa and Mastercard, but Apple Pay transactions still ride Visa or Mastercard rails. Google Pay rides the same rails. The tech companies became a new interface. Visa and Mastercard stayed the infrastructure underneath. Apple controls the tap, and Visa controls the movement of money. It's the difference between making the map and owning the roads it runs on. There's one competitor they do take seriously, China's UnionPay. By card count, UnionPay is the biggest network in the world, but almost all of its volume stays inside China, where Visa and Mastercard have limited access due to regulation. If China ever fully opened its market, the entire balance of power in payments could shift overnight. That's why Visa and Mastercard spend enormous effort lobbying, negotiating, and trying to expand inside Asia. These systems will never replace Visa or Mastercard globally, but they chip away locally. In response, the networks double down on premium services that local systems can't easily replicate. Global fraud detection, worldwide acceptance, travel benefits, sophisticated settlement systems. National rails might win local battles, but Visa and Mastercard still win the global war. And here's the twist. The rivalry between Visa and Mastercard can never truly end. Neither company actually wants a monopoly. If Visa destroyed Mastercard, regulators would tear Visa apart, and if Mastercard overwhelmed Visa, the same thing would happen. Two giants offer the perfect regulatory balance. Enough competition to look fair, enough dominance to stay untouchable. They compete fiercely, but both benefit from the duopoly. And that brings us to the payoff. The war between Visa and Mastercard stays hidden because neither company touches your money. They don't lend it, they don't store it, they don't risk it. They simply move it and charge a toll every time money travels across their rails. Because they don't take deposits, they avoid banking regulation. Because they don't issue credit, they avoid lending risk. Because they work with every bank, they avoid being replaced by any single bank. They built a world where every merchant, every customer, every bank, every government, and every payment sits on top of their infrastructure. They don't need to win your attention. They just need you to keep spending. They are the rails, and everybody else rides on top of them.